Now, before we answer the question, there's a couple of things that I would like to say, which I will keep on saying, but not always write down. What we've got here is a question for 5 marks, and therefore we're going to try and make 5 points. We're going to try and say, yeah, full stop, leave a space, new paragraph, because the marking guide is always 1 mark per valid point. Yeah? So if the marking guide is 1 mark per valid point, we physically want to present the answer with gaps. So we challenge, this is worth a mark, this is worth a mark, this is worth a mark. Now this is not how your examiner writes his answers. The examiner's answers are block. The examiner's answers are typed. The examiner's answers are very long. The examiner's answers are a bit scary. The examiner's answers are not what you need to produce in the exam to pass. They're worth reading, you can learn from them, but they're not giving you, they're not what you need to get 60%, 55%. Yeah? They're like perfection. In fact, they're more than perfection. There's been a couple of times I've copied out the answer, and it's taking me longer to handwrite out the answer than the time allowed. Never mind the thinking process. So 5 marks means 5 points. If we've got 5 marks and we're looking at answering the question, then what we should be thinking about always is our time management. So if we look at our time management process, we multiply traditionally by 1.8, and therefore that gives me something like 9 minutes in order to answer the question. I'm going to answer the question to the best of my ability within 9 minutes. You're going to see how my brain works. I'm going to talk everything out. Hang on, please. Discuss how Young would measure the fair value of its land. So the accounting issue that we're being examined about is fair value. That is the accounting standard, and it's land. So it's probably PPE, could be investment property, could be held for sale, could be inventory. I need to look at the information within the question. Yangon uses the revaluation model for its non-current assets. They have several plots of farmland which are unproductive, so it feels very much like PPE. The company thinks that the land will be worth more if we built houses on it. Several people want to buy the land. No planning permission has been granted. Preliminary inquiries with the regulatory authorities seem to indicate that planning permission may be granted. The government has said that agricultural land should be used for housing. Yangon has been approached to sell the land for commercial development, a factory, a hotel, a commercial development. And this would be at a higher price than that for residential purposes. Yangon doesn't know what to do. Yangon needs advice on how to measure the fair value of the land in its financial statements. So that's the dilemma. Where do we start? Where would be a good way to start? With a definition, yeah. So it's easy to start if you have learnt, if you have understood a definition, get the definition down. It's 1 mark, it gets us writing, it gets us in the flow. So we have a definition of fair value. Fair value is? Fair value is market value. Yeah? Fair value is the price you would expect to receive if you were to sell an asset yeah, in an orderly transaction between market participants. Fair value is market value. It is the price expected to be received on the sale of an asset in an orderly transaction between market participants. Full stop, leave a space, new paragraph. Right. Danger is that we now write everything that we know about IFRS 13. Danger that we now write as much theory as we can remember. What we've got to remember is that what the client wants, what the examiner wants, is our judgment on our application. Yeah, we're not Google, we're not just cutting and pasting. They come to us specifically for advice. So what advice are we going to give? What's the answer? Because I can't make an answer 10, 12, 20. I've actually got to give them some advice. So what is the advice? It's farmland, residential purposes. Can we think of alternative uses? Are alternative uses allowed? If we're evaluating fair values, can we take into account alternative uses? Yes or no? Yes, it's whatever you can sell it for. Yeah? Full stop, leave a space, new paragraph. Yang On is able to measure. Yang On is able to measure the fair value of land taking into account alternative uses. Fair value is the best, the highest price. Fair value is the best, the highest price. So is the conclusion commercial development? Is the conclusion commercial development? Can we sell it for commercial development? I don't think so. In my judgment, there isn't a market for commercial development because the law doesn't facilitate that fact. Yeah? Whilst it is suggested, full stop, leave a space, new paragraph. Whilst it is suggested the land could be sold at a higher price for commercial development, this is not currently legal. This is not currently legal. This value, ignore. This value, ignore. Do you know what? That's a clear-cut one, I think. The residential property one, well, I have a conclusion. The government may be indicating, there may be suggestions, but it's still not allowed. We're going to have to value this land on the basis of its existing use. because it's not legal to have an alternative use. Full stop, leave a space, new paragraph. On the same basis, residential values on the same basis, residential values cannot be considered. Whilst there are indications things may change, no planning permission, no planning permission. Start with the definition, discuss, come with a conclusion at the end. What is my conclusion? Farmland. What is my conclusion? Farmland. And how would I practically go about doing it? Level 1, level 2, or level 3? Do you know what I'm talking about? Let's just take a time out for a second because, we're now out of time. Yeah? So there are two enemies in this exam. Two enemies in this exam. Two limiting factors in this exam. One is time, one is knowledge. Okay? And time, for me, is the big enemy that we're fighting. Now, there is a conclusion that we do farmland. We could write down a very quick conclusion. Yeah, we should do the fair value on farmland. But I think there's an extra little twist that we can bring in, a bit of technical knowledge. Let me remind you that there's a fair value hierarchy. Level 1, level 2, level 3. Level 1 is pure. Level 1 is the best. Level 1 is observable. You've got identical items in an active market. So you can very specifically come up with a fair value on that basis. Because all you have to do. So share prices, there's no calculation. Quoted company shares, you can observe the share price, absolutely perfect, absolutely reliable, absolutely objective, 100%, no problem. Level 1, that's the best. Level 2 is where you're looking at similar items, maybe in a slightly inactive market. And level 3 is where there is no market to observe. And because there is no market to observe, you start calculating present value, future cash flow. When we're dealing with land, do you feel that land is level 1, level 2, or level 3? You can get level 3. You can get level 3. Good way might be if the land is being rented or the property is being rented, and you can see, you could then work out a capital value based on the rental income, based on the yield, and work backwards on your return. But I think with farmland, I don't know about you, but most farms tend to have a farm next door or have a farm within the area. So if you've got 10 acres of land, your land may not have may not have changed hands for 10 years, but maybe next door changed hand a year ago. Or maybe, down the road, changed hands 6 months ago. And there might be, therefore, a reference to what that similar land sold per acre on a fairly recent transaction. And in some countries, that information is publicly available. So on that basis, although your land is unique, so it can't be level 1, because there's no other land like your land, there is similar bits of land in the near location which may have recently passed. So therefore, on that basis, we would use level 2. We would observe what similar farmland had recently sold for. That would be our best indicator. So, our conclusion conclusion is this, yeah, the fair value of Yangon's land should be based on the selling price of similar farmland in the locality. This is level 2, observable inputs. Full stop, leave a space, new paragraph, move on, next question. All right? So we saw how time is so tight. Now I won't do full answers every time. But I'm always up for doing a full answer. Yeah? I'm always up for sort of practicing how that feels, because that's what you're going to have to do in the exam. You're going to have to read the question, you're going to have to come up with an answer that hopefully has a beginning, middle and an end. A definition, a discussion, an application, a judgment, and then a conclusion. Now sometimes the conclusion is a number. You could do a calculation of a deferred tax liability, or you could do a calculation of an operating lease finance cost. But most of the marks would have been discussing why it's a temporary difference or why it's an operating lease or whatever. Yeah? I like fair values. Yeah, it's something the examiner also likes. They seem to come up a lot. Right, yeah? Is that okay? Go on. Fair values. So we've been going now for about half an hour. I know some of you have arrived late. What I said at the very beginning was hello. And what I said at the very beginning is we're starting today at 2, we go through to 6, but if anybody